Well, hello and welcome to another in the series where we're looking at the quantum trading indicators in more detail. And in this one in particular, we're looking at the quantum VRSI indicator, which is the volume relative strength indicator. And I hope by now you've had a chance to have a look at the introductory video that I recorded, which walks you through the how and why we developed the indicator and how you apply analysis in terms of reading what it is that it's communicating to you on the chart. Now, one of the key principles that I stressed throughout that video was that we always use it in combination with our underlying methodology, which is volume price analysis. Volume price analysis is the cornerstone that everything that Anna and I have done in the last 25 years, all the education material, all the videos, all the work that is out there on the internet, volume price analysis is key. And it applies to everything. And it doesn't really matter what the instrument is. It doesn't matter what the time frame is. The beauty of this approach is that it can be used by anyone and in any time frame and for any instrument. And the same also applies to the VRSI indicator, which is an entirely complementary indicator to VPA. You'll see as we walk through these charts how it works and where many of the principles, the analytical principles that we apply to volume price analysis apply equally well to the VRSI indicator, which really draws apart, it delves inside the volume price analysis methodology, if you like, and presents it in this very graphical way, a very simple way, and a very intuitive way as well, to help to give you that all-important understanding of what is going on. And we use the word pressure a lot because it really does describe the indicator very well. And it's just a term that we fell to using, which we felt really did describe precisely what we're trying to achieve here with the indicator, a sense of the pressure behind the trend, or indeed a lack of pressure where we're in congestion. We see a lack of pressure in precisely the same way that we see a lack of volume, lack of participation when we're in congestion with narrow spreads, so on and so forth. So we expect to see the same with the VRSI indicator. So without further ado, let's get started. Now, for continuity purposes, I've taken the 7 stocks as I did before in the introduction. So we've got Nike here. We start with that. We've got Oracle, Disney, JP Morgan, PepsiCo, ExxonMobil, and Wells Fargo. The workspace I've set up is really to split out volume from the VRSI indicator, but you can, of course, combine the two on the one chart if you wish, but I find this a nice, clear way of doing it. On the top line, we have a 5, 10, and 15-minute combination, and that is replicated below, as I say, just with volume. So it's the same price chart above and below, just on different time frames and using volume in isolation. So it gives us a very clear view from a volume price analysis perspective, and above we have our VRSI indicator. So that's the layout, and the charts are all linked, so you'll see when I change from one stock to another, this will automatically update and refresh all the charts. We start up on the right-hand side here with Nike on 5-minute. And a key part, as I explained in the introduction, a key part of using the indicator is multiple timeframes. Multiple timeframes applies universally, whatever you're doing, whether you're using multiple indicators, whether you're using multiple charts, using multiple timeframes is another building block, if you like. Whether you're a trader or an investor, we're always looking at the chart across multiple timeframes. Just as a quick refresh in terms of how we use the indicator and analyze it, we have our fulcrum point here at 0, where the pressure strength changes from bullish to bearish or bearish to bullish, depending on which direction we're going. The second aspect of the indicator is the color changes. We have dark colors for strong sentiment, so where we are strongly bullish, it's dark blue. Where that sentiment diminishes a little bit, it turns to light blue. And for bearish sentiment, we have brick red, very dark color. And then when we weaken a little bit in terms of bearish sentiment, we go to salmon pink. So that's the second element The third element, which is absolutely key, are the height of the pressure bars, because height denotes pressure. The higher the pressure, the higher the bar, the higher the pressure, basically. And this is really ties into also the strength of the trend. Where we see a strong trend like this, and by strong trend, I mean the angle of incline, this is rising very sharply. In that context, we expect to see tall bars, which is what we do see indeed. When the trend is flattening or is on a shallow incline like this, is rising not very steeply, you expect to see lower pressure bars. So that concept, if you like, is another fundamental building block of the indicator. So the height of the bar, the height of the pressure bar will always signal strength, pressure behind the trend. A lower height of the bar will signify, yes, we have a trend. We may have, as we do have here, we have pressure and we have maintained height of the bars through this section. But nevertheless, the strength of that trend, the pressure behind that trend is much lower, and that's signified by the angle of inclination of the trend. So here we see a classic example, and the overlap between the VRSI and VPA is constant and there all the time, because by that I mean we've got a strongly rising trend here, and we have strongly rising pressure bars. So it's exactly the same as with our volume price analysis methodology. If we have a strongly rising trend, we want to see strongly rising volume in precisely the same way. And this is the common thread that really ties the two approaches together, and why they are a perfect combination, a blend of the two approaches. So we see it here, rising pressure bars. We have dark blue, we have light blue. And then as we weaken a little bit, those pressure bars tend to decline a little bit in this reversal. But then we get a further injection of pressure, so telling us that the strength in the trend is still there. But then ultimately, as we move into this region here, we see this steady decline in the height of the bars and into this region. And ultimately, we move right the way back down to the fulcrum point. We then get the rollover. We then move into a trend lower. The inclination of that trend is quite steep. So we see rising and tall pressure bars to the downside. We're also into a darker color, which tells us instantly that we have a strong trend developing. And the important point to note about this particular phase of price action is that we do not see a tailing off in the height of those bars. We get a little bit of a reversal here when we get the price trying to rally against the bearish trend, but it doesn't amount to much, and the color changes instantly back to our darker brick red, and the height of the bar increases also. And benchmarking and looking at the height of the bars is a constant aspect of the indicator that we focus on a great deal, because what this tells us all throughout here is that the strength of that particular trend has been maintained and is not diminishing. And it only diminishes when we get to the final part here, where the height of the bars falls away. We've gone to salmon pink, and then ultimately we move into our first bullish bar here. What's also interesting, you'll note here that we've not gone into a lighter blue at this phase. We've gone straight through into a bright dark blue, telling us that the sentiment has now picked up a bullish sentiment quite rapidly, and therefore it's no surprise to see this injection come in on the next candle. So those are some of the key components, and we'll pick up on those throughout. This was the 10-minute chart that we looked at in the introductory video, so I won't dwell too long on that one. And on into our 15-minute time frame. We just pop that up full size. There we go. Just ease that out so it looks more straightforward. And here really encapsulates all the elements, if you like, of this particular indicator. We have a strongly rising trend. So we have strongly rising pressure bars in terms of height. They're also dark in color, so really confirming that for us. Then we start to move into the weaker part of the trend as it starts to flatten. Here we move into a congestion phase. The bullish sentiment is now waning quite rapidly. The height of the bars is falling away metronomically. And then we move into our price waterfall. Down we go. Strong red, brick red color. and the height of the pressure bars increases dramatically as we go. And even in this little punctuation here where we've had a pause point where perhaps we might be frightened into getting out, basically the bar is saying, yep, fine, okay, the bearish sentiment's weakened a little bit, but on the next one we get another push down as well as bearish sentiment continues to hold. And then ultimately at the end here, we do indeed see that reversal coming into play into the bearish phase of price action on one candle. And then, of course, at the bottom, we'd be looking at our VPA analysis. And if I just pop that out, I don't propose to do a huge amount of VPA analysis on these charts because there are so many examples in the program and indeed so many examples on the internet that we've done in live webinars and elsewhere. But really, as you can see the complementary aspect here of volume with our VRSI indicator, because as this price waterfall develops, in almost a perfect scenario, we've got widening spreads. What are we seeing on the volume? Rising volume. So we've got rising volume, a falling market, confirming the strength of that particular trend. And that's exactly what we saw in terms of the VRSI above. So you can start to see now how complementary the two are when they work together. It really is a perfect combination. And the essential takeaway that I want you to take from all of these videos is this, that it's all about confidence. When we're in a trend and we've got a position in the market, we want to maintain that to maximize our profit. And that's why many of the indicators we developed are designed to do just that. It's a part of VRSI. Of course, it's very much volume and price based, but an essential component is to give you that extra confidence to hold that position. You can hold it based on volume price analysis, of course you can, but this is just another level, if you like, to give you that confidence to stay in and not be emotionally triggered out of the market by the market makers, because let's face it, that's what they're all about. And no trend, higher or lower, rarely goes in a nice sequence where you have no pullbacks, no reversal, no pause points. It always happens, and it is at that point that you start to panic, your emotion kicks in, the fear kicks in, you don't want to lose profit that you've already mentally banked, and so you close the position, and of course the trend then picks up and often moves at a much faster pace as well, and you're left regretting that emotional decision. It's a tough business, but this is why we've developed many of these indicators to try and overcome and help you manage that emotion so that you are not flicked out of trades too early. Next one we looked at was Oracle, ORCL ticker. There we go. Let's click up on 5. Let's pull that down because it's disappeared off the screen. There we are. And again, a nice example really showing us various aspects of the VRSI indicator. We have the sharply rising rally here. This was the open, which is always volatile. You will always see big injections of volume, and that will be mirrored with big injections of pressure as well. So don't be surprised to see it there. And the first 15, 20, 30 minutes or so, we're waiting for the market to settle and to really get into its stride and start to reveal the trend of that particular market, whatever it may be. So we see it here, we're into dark blue, we start to see nicely rising pressure bars here, steadily rising as we move up into the trend. Then we move into the congestion phase, mildly bullish at this stage, but the trend is not particularly strong, so our pressure bars are not particularly high. And then they start to diminish right at the end here, and we start to dive down into our bearish phase of price action. Pretty similar to the previous chart in many ways. I think the difference here is as we move into this congestion phase towards the end, notice how the pressure bars are really falling quite metronomically here and just signaling very clearly that the momentum behind that particular move has died away. Very strong here, but then we flatten out, and although it's still mildly bearish, you can see from how these bars are falling away back down to the fulcrum line, really the momentum has fallen away and dried up from that particular phase of price action. Up onto the 10-minute, we looked at this in detail on the intraday, on the initial video, so I won't spend time on that one. And this is up onto 15-minute. Just pull that over a little bit. There we are. So we're on the 15-minute time frame. And again, to stress the point, we're using this in multiple time frames. It gives us all the information we need. You can see here through the trend as it moves higher, the bars here are pretty consistent. We've got punctuated with dark blue, which is great. And it's only at the end here, once we start to see this top developing, got a nice 2-bar reversal there right at the top. Down come the height of the pressure bars, right the way down, step down to the fulcrum, and then we reverse into our rising pressure bars here, really confirming that for us. So we're looking at this across the time frames, not only on our VPA time frames, but also on our VRSI time frames as well, and really giving us that all-important confidence boost to stay in. Because even through this congestion phase here, where we had a lot of dojis developing, notice how the height of the pressure bars there doesn't diminish as quickly, as rapidly as here, for example. It's only declining slowly. So it's giving us a clue, a hint that perhaps this bearish sentiment that we've seen, yes, it's come to a pause point, but perhaps it's still being maintained. And indeed, on the next one, it is. And we get a nice down candle there just to finish off the move at the end of that particular reversal lower. And again, you can see all the VPA lessons below, and all of that will be mirrored across the time horizons. So that's Oracle. Let's have a look at Disney, which is DIS. Go on to Walt Disney. There we are. Let's have a look at our 5-minute. Let's pop that up full size. Pull it down again. There we are. And again, very similar lessons here. Over on actually the chart's fallen off the bottom there. There we go. We've got a phase of bearish price action, then we move into bullish price action, diminishing bullish sentiment here, and out the other side into bearish again. So a really nice rotational view here, if you will. And the lessons are exactly the same wherever we're looking at, what part of the price action, whether we're looking at pre or post or wherever we are. Obviously, within the pre and post, it's not going to be so liquid. The pressure is not going to be so high there. But nevertheless, the indicator works across those time frames as well. But you can see here, we've got the nicely rising pressure bars, confirming the strength of that bearish trend as we move lower. It's repeated here again. Then ultimately, we come out of it. We see quite a rapid stepping down in terms of the height. We move into bullish phase here. You'll notice once again, we've gone from a light salmon pink here into dark blue. So no transitional into light blue. We've just gone straight through. Yet we've got bullish sentiment developing quickly. And it is because the trend is moving sharply higher. We move into congestion. We notice the drop away in terms of the height of the bars. Then we move into a further section of that trend, a weakening of the trend, so the bars are not so tall, but nevertheless the bullish sentiment still remains in place. And then ultimately at the end, we ramp all the way down as that comes to an end, and down onto our bearish phase of price action, which develops nicely through this phase. Then we come to the end of that phase and we move back into a bullish phase again. So it is just a constant oscillating process. This is on fast time frames, obviously, but the principles are exactly the same. Let's pop open the 10-minute, which we looked at before. There we are. Again, precisely describes the same thing. We've got the bullish sentiment here, nicely rising pressure bars, good height to them as well as we move up. And then ultimately, as we get to the top here, we see the dropping away and the rotation into the higher candles here, the higher bars, pressure bars as they rise throughout that phase of price action. Onto the 15-minute for Disney. There we are. And it really just reinforces what we're seeing on our faster time frames, which is what we always do across the time horizons. And you can see the weakness starting to develop here. Nice big upthrust candle there, probably had some good volume under it. So instantly looking at the volume for that sort of type of candle, it would give us a clue that this is not looking particularly strong, and perhaps we're looking at some weakness coming into the market and an opportunity to take a reversal trade in due course. So that's on Disney. Now let's click over to JPM, which is JP Morgan. Let's pop that one up on 5 minutes. Let's put that up full size, pull that down. There we are. And really what I wanted to highlight here is the congestion phase. Where we move into these congestion phases, this is what you expect to see. You expect to see these very small bars, these pressure bars. They're very, very tight to the fulcrum. There really is nothing going on. We've got a tiny repeat of it here, but this is what you will see. And clearly that will be associated with narrow spread candles. It will also be associated with a relatively low volume in terms of the volume chart. There will be very little change in terms of height or anything like that as we move through that region. We get a little bit of a rally here. We get a little bit of bullish pressure coming in, but the height of that bar, and this comes back to the comparative nature that I mentioned earlier on, the benchmarking. What we're constantly looking at is benchmarking the heights, as indeed we do with volume price analysis. We are always looking at the volume bar itself and comparing it to the price and comparing it to other volume bars and their price associated to try and determine as a benchmark whether we are seeing an anomaly or whether we are seeing price and volume in agreement. And it's a very similar process here. We're looking at the height of the bar all the time. And when we've got higher bars over here, we can assume that if this is the amount of pressure that's required to move this trend up at that steepness, if you like, then this is really a much lower level of pressure. It's less pressure. And whilst it's still nice to see, it doesn't have the same momentum behind the trend as pressure in these sorts of areas would do indeed, or indeed as we saw as the session got underway over here. And the same applies to the downside. Obviously, we're looking at the extent of the height of the candle. We get this lovely curvature in terms of rising pressure, and we're seeing it as that move develops, a very nice price waterfall. These, as I've highlighted in many of the VPA examples, are great entry signals because this candle signals weakness in the trend lower. In other words, the market makers are selling stock they've had to acquire. They're selling it back into a weak market, so we get this big sort of wick to the upper body, and then it collapses back down. And if that's associated with strong volume, that's telling you loud and clear that this is going to continue on lower and continue with some momentum, which is indeed what we see. We see accelerating momentum, accelerating pressure here as we move down into the lower part of that trend. And ultimately, we move into the congestion phase where everything dies down and quietens down as we come to the end of the session. That was on, what were they on there? 5 minute. Here we are up on 10 minute. And we looked at this one more closely in the introductory video, so I won't dwell too longly, but there we see we see the price waterfall with the nicely rising pressure bars there, and all nice strong color as well. Up onto 15. Just pop that up. There we go. And again, the same sort of lessons. And this was from the previous day, in fact, but again, it describes very clearly. We've got a lovely arcing here of the trend. So the trend starts off quite strongly in this move, but then it starts to weaken. And it starts to weaken because the spreads are narrowing, and we come almost from a 60-degree angle up here almost to horizontal here. And what we're seeing in combination with that is what we expect to see, is that the pressure bars here are constantly falling. So as the market is rising, these are telling you that yes, we're still in a bullish trend. Yes, we've still got some pressure in there, but that pressure is much diminished from the start. And in addition to that, the sentiment is also waning. It's very much a tiring trend, if you like. It's a trend that's losing momentum, and it's tired. It's running out of energy, if you will. And really, that's what happens. And it also describes at the end here this congestion phase, which I mentioned just now. And here it is. It's just very flat, very small bars here, very small pressure bars, really nothing to write home about. Little punctuation of color changes, but the actual height tells you everything you need to know. And then we get into the next part of the day. Off we go with a big injection of pressure as the market gets underway, and we get a surge in volume at the start, which is what we always see. Then we see the falling off and gradually down into our bearish trend at the other part of the day. So that was JP Morgan. Then we did PepsiCo, which is PEP. Let's pop that one up. Lots of red, lots of brick red, lots of salmon pink here. Just click on that one on 5 minute. There we go. Very, very strong trend lower, as you can see, and supported with the color changes, supported with the height of the bars. But then as that comes to a potential pause point, we see the height of the bars falling away quite quickly. But then we get a further injection, and once more it tells us that the bearish sentiment is taking hold once more. So don't be frightened out. And really that's what this is about. You can see that those examples all over the place, falling price and rising pressure. And again, it just reinforces the relationship between the VRSI indicator, the volume relative strength indicator, and our volume price analysis methodology, where we are constantly looking for volume and price in agreement. If the trend is rising sharply, we want to see nicely rising volume. If the trend is falling sharply, we equally want to see nicely rising volume to support it, to confirm that the energy, the momentum is remaining firm in that trend lower. And there we go. That's on the 10 minute. Very nice. And again, just to confirm and reinforce the point that the height of the bars here really didn't fall away very dramatically. It maintained a good distance from our fulcrum, and therefore confirming that whilst the strength had weakened a little bit, it hasn't weakened that much. And finally up onto 15 here. There we go. And really just puts it into context on the slower time frame as well. And again, back to the issue of benchmarking, which this gives you a very clear view on. The trend lower here, which it is a bearish trend, but it's not particularly strong. It's drifting lower and it's not falling out of bed. The really described by the height of the pressure bars here, because where it does fall out of bed and really pick up some speed and momentum here and accelerate, then that acceleration is denoted by strongly rising or firmly rising bars here, which rise very quickly, whereas over here we see nothing like that. And that really reinforces the points that I make constantly about this benchmarking issue, that that it's a key component of the indicator and one that we need to pay close attention to all the time. That was PepsiCo. Let's have a look at the penultimate one, which is ExxonMobil, which is XOM ticker. Just click that one up as well. More red there too. Let's pull that down below the top of the screen there. There we are. And here we are, the start of the session. Big injection of volume, so we get a big injection of pressure here with very tall pressure bars, lots of volatility, which is what we always expect. Really doesn't go anywhere, and that's denoted by the drop off, the lack of interest, if you will, of the bullish side of the market, and we come all the way back down to zero. Then we move into this congestion phase. The bars are not very tall, and then we start to pick up momentum here. And the other aspect of this, which I also showed you in the introduction, was to where we get these big volume bars or pressure bars at the start of a move, which invariably you do, because that's what happens when the market opens. When the cash market opens, we get a big influx of volume. So you get a big rise in pressure. And to scale that out and to really get a better look at what we're seeing, if I take that over to the left-hand side of the screen, instantly you can see these are much more demonstrable now and give you a much better view on the strength of that particular trend. And you can also benchmark it against what went on over here. So it just gives you a much clearer view. There we go. So you can look at this and say, well, this bar was equivalent to that and that amount of pressure. Now we've got this amount of pressure developing here. It really makes it much more demonstrable. It's just a little trick we use all the time. We use it in VPA, and you can use it in exactly the same way for your VRSI indicator as well. And it just confirms the strength of the move, where it's not distorted, if I can use that word, by what goes on over here. And you'll see that a lot clearly in the index futures as well, where we're trading in Globex. You trade in Globex and you get a very demonstrable a volume profile, absolutely fine. But as soon as you move into the cash markets alongside Globex, everything in Globex is compressed, and it makes it look as though the volume is not readable, which is not the case. It's purely the fact that that has been compressed by the virtue of an inrush of volume. That was on 5. This was on 10, which we looked at in the introductory video. And again, you can see the decline in the bullish sentiment there, denoted very much by this steady decline in the height. And then we move into our bearish phase on 10 and finally up onto 15. There we are. And again, similar example here. And then we get our injection of pressure and volume as the day gets underway. It declines and we rotate into our bearish phase of price action. All very nice and clear to see on the chart. And the last one we're going to go to is Wells Fargo, which is WFC. So we'll just pull that one up very quickly, but I'm sure you're getting the principles, the general idea, how to read the charts and everything else used in combination with both the volume price analysis and or the indicator above in the way I've laid them out here. But you can do it in any way you choose. The injection of volume and the injection of pressure, here we are. But that dies away. Notice how quickly it dies away. And then we move into this extended congestion phase through here. Tiny little bars above and below, really not much to speak of. And then we rotate into our bearish phase of price action, changing in color. And the heights of the volume bar, the pressure bars here are maintained throughout. And only really changes when we get to the end here. And then we move off into another bullish phase where we've got our pressure bars rising. And we also rotate from a lighter color straight through into a darker color, no light blue on that particular occasion. Up onto 10. Pull that down, back into focus. There we are. And again, pretty much the same lessons here. And a really, really nice example. I mentioned it in the introductory video as well. Just this perfect, almost perfect catenary curve that we've got of the pressure bars rising and really giving you that confidence to hold that position, to maintain that position, whatever happens. It's giving you the confidence to stay in that particular trend and maximize whatever profit you can and not be shaken out of the market by the market makers, which is what they're there for. And finally, this just reinforces it in a slower time frame. There we are. And again, it's all about benchmarking. We can look at this pressure bar here, very tall, but it's at the start of the session. And then the sentiment here really dies away quite rapidly. And we come down to our fulcrum and off we go into our bearish move to the downside. And you can relate that over here in terms of the inclination of the trend here. It's quite steady. It's probably around 40 degrees, 40 degrees at most, probably not 45. So the height here is not going to be extremely tall. It's just going to be supportive of that particular trend and not going to be extreme, as such as here, for example. It's just going to be supportive, but really describes the trend in a visual way, if you like, purely through the aspect of the height of the bar, which again is a really nice way of looking at it all. So there we are. I hope you've enjoyed this particular video. There's lots more to come as always. I'm going to do different instruments and also look at slower time frames as well. But I stress the point again, please use this indicator in combination with volume price analysis. Whether you want to apply the volume indicator to the chart alongside the VRSI or split it out as I've done here, it's entirely your choice. I prefer to use it in this way because it's a much cleaner view, but you can it does take up obviously more real estate space in terms of the workspace, but the choice is yours. So thanks for watching. See you soon and bye for now.